oil is getting crushed here, Art, and it's not doing anything for the transports.
No, not at all. But, the inventory data yesterday was stunning. They had looked for more like a neutral number, and instead the aggregate, when you put the products and the crude together, we're up about 11 billion, and the market just could not handle that. And so that's adding to what is primarily a trade war sell-off this morning, and it's nearly universal. There are very few markets around the globe that are not getting pounded.
So do you think, can we start building an argument that production is not demand on oil, that inventories are not sales in apparel or cars or something like that?
Well, it does seem to be that this slowing economy that we talk about, global economy, is beginning to take hold. And you see copper is another low, multi-month low. Down almost 8 days in a row. All of those usual old yardsticks are not kicking in. So now we want to see if the supposed Trump put shows up. After the sell-off on the 13th, he seemed to get the message. So whenever the market sold up heavily, there was some kind of mollifying comment or whatever. So let's see if he comes out of the wings this afternoon. It is so much all about trade. I mean, yesterday you had him storm out of a meeting after a 3-minute introduction, and the market did nothing. The market didn't move at all. You had the Fed minutes come out. The market read them and had no reaction whatsoever. But the minute you get something on trade, world markets take it on. So that's what the story is all about.
The president just tweeting that he was extremely calm yesterday with the meeting, that he did not storm out. But Art, to your point, on the minutes, so the Federal Reserve says they're patient, patient, patient. They use the word 8 times in the notes from the last meeting. Is that patience going to be tested the worse this trade war gets?
Well, you know the camp that I'm in, okay, I've said that rates would probably move lower before they moved higher again. And I'm still in that camp. And, they're watching this. I think what they're going to wait, given the history of the Fed, they're going to need domestic data. They're going to need to see automobile sales slump or housing slump or whatever. And then they can talk to that. I don't think they're ready on a grand scale to say, well, these trade talks are not going well. We'll have to do something different. So you will need to see
more of a slowdown, it sounds like what you're saying.
You're going to need to see the details of the slowdown, proof that they can walk in and say, here it is.
B of A cuts their 10-year yield target year-end to 2.6. So when do we start seeing that from you? And when do you, because that's one sign is when Art starts calling for a cut or predicting a cut.
Well, we'll be getting there, but I think it may be several weeks because, as I just said, we're going to need demonstrable data that the Fed can justify itself on. And let's not forget one other thing. Yeah, the Fed is in control, but if the markets really rebel and say this is not going well, the markets can move the rates down before the Fed does.
Which sectors do you see as the most vulnerable as these trade tensions heat up and the rhetoric sort of ratchets higher on both sides?
Well, I think probably the one that you've been talking about, which is retail, and it's there. And it was interesting to hear the gentleman from Cowen say that they like Walmart for 2 reasons. Number one, half of the sales are in food, which is not involved in that trade war, and that 66% of what they sell is domestically sourced. So you're going to see a lot more of that in reports now. But I would think I would watch retail, and then I would begin to watch auto sales.
Finally, Europe, Art. Deutsche, the PMIs, the IFO index, and Brexit. I mean, it makes you wonder why Europe isn't down even more than it is.
Absolutely. I mean, the PMIs are showing that this is digging in all around the world.